So are you ready to go over your numbers? Hi, I'm Mark Stiles of Stiles Law down here at Studio B, and today what I want to do is go over the Alta settlement statement. So if you're a buyer or a seller of residential real estate in the Commonwealth of Massachusetts, you're inevitably going to see this document right here. And what it does is it explains all of the money transferring hands. Okay, so let's get started. What you'll see is at the top who the buyers are and who the sellers are and who the lender in the transaction is, as well as the closing date. Now, as you go down, you'll also see the disbursement date. So if this is a refinance transaction and you have a 3 business day right of rescission, the disbursement date will be different than the closing date. If we continue down, you'll see 2 sides of the sheet. On the left side is specifically for the seller. On the right-hand side is specifically for the buyer/borrower. And each side has a credit and a debit column. Let's start with the buyer. If you look to the right, the buyer has a debit and a credit column. The credits are always more fun to talk about, so we'll start there. Most buyers have a deposit. When they place a deposit down at the time of purchase and sale agreement, that amount is credited at closing, and that's where it's being credited right here. Then you have the loan amount. That's a credit into the credit column. Those 2 credits are the gross credits to the buyer, which you'll see on the second page. But if you look over on the debits are what is taken away. And it starts with the purchase price. So the seller's sales price is the buyer's purchase price, and here it's listed at $350,000. If you start to go down, you'll find all of the other debits. For instance, what happens if the seller has already paid the upcoming tax bill? Well, there's an adjustment that needs to be made, and you'll see the $93.62 represented here is being taken from the buyer to pay the seller back. Same with the fuel. If there's oil, that's usually left for the buyer. Oftentimes, the buyer is asked to pay the seller for the value of that fuel, that oil, that propane, whatever it may be. But you'll see here listed as $211.78 being taken from the buyer and delivered to the seller as an adjustment. If you keep going down, the next section is the lender charges, the loan charges. What is the buyer's lender charging and recouping for their due diligence? Right? There's an appraisal fee, a credit report fee. These are items that need to be done to approve that buyer, that borrower, you. Mortgage insurance, prepaid interest. As we all know, mortgages are paid in arrears. So if you're closing, as it is here and never will be on December 25th, but if it was on December 25th, the lender would collect the rest of that month's interest so that your payment would not be due 5 days after closing, but would be due a month and 5 days after closing. Again, mortgages are paid backwards in arrears, so your first payment here would not be due until February 1st. Okay? Going down, you'll see some of the other charges that are collected. Maybe the homeowner's insurance premium is being paid at closing as opposed to having been collected up front. And then the impounds. These used to be referred to as escrows. Your lender is collecting enough so that there is plenty in that account should something go wrong. Should a payment be missed, the taxes and insurance will not. And then, of course, the settlement charges, which goes to the second page where there's out-of-pocket charges of that settlement company for title exams, municipal lien certificates, plot plans, passing those costs back to the consumer. But these are due diligence items that need to be reviewed prior to closing. And then there are recording costs. What happens with the deed, municipal lien certificate, and mortgage? Well, it needs to be recorded, and that's the recording costs. So when you add up all of the debits, $361,052.02, and you subtract that against all of the credits, remember the loan amount and the deposit was $260,000. Well, the buyer needs to bring to closing $101,052.02. What about the seller? If you're selling your home, you'll see that the adjustment for the purchase price is the same as your sales price. So you're selling the property for $350,000. You're gaining 2 credits, those same credits that the buyer was paying to you, for tax adjustment and oil adjustment. And that's it for the first page. And the debits from the second page, assuming you're working with a real estate professional, the commission is listed here. And deed stamps. One of the things that people always forget, and we have a video about what sellers should expect for their costs associated with selling, but they oftentimes forget the tax on the way out. This isn't an income tax, this isn't a capital gains tax, this is a deed stamp transfer tax. And that's based on $4.56 per $1,000 of the sales price. In this case, it's a $1,596 cost. Often forgotten, but don't forget, in Massachusetts, there will always be a transfer tax. And then the payoff. Assuming there's a mortgage on the property, that has to be paid off to give clear title to the buyer. So the settlement agent, the closing attorney, the title company will collect that amount and pay it to the penny. And then there's miscellaneous charges for overnighting and wire conveniences. When you add all of those debits up to 157, 112.12 and subtract against the credit, you'll see that the seller will have $193,193.28 given to them once the property goes on record. Folks, I hope that helps explain an otherwise complicated document. If you appreciate the content, please share it with everyone and anyone. And don't forget to subscribe to our YouTube channel right here at Stiles Law. Thank you, and be well.